Greetings and welcome to my YouTube channel, The Credit Union Evangelist. I am yours truly, the Credit Union Evangelist. And you're probably wondering, well, who is the Credit Union Evangelist? Well, I am a passionate credit union enthusiast and I promote and raise the awareness, everything about credit unions. I'm also a content creator, I'm a content curator, and my motto is spreading the good news about what? CUs. In other words, spreading the good news about credit unions. And I'm glad that you are taking the opportunity to view my first inaugural video. So much appreciation. What you can do to also help me in spreading the good news about CUs is hitting the subscribe button that you see right there on this video. Also, you can share this video so that others can hear about the good news that we're promoting about credit unions. Now, our topic today is a question. Why do banks hate credit unions? Now, you probably are thinking, well, credit union evangelist, why are you being a little extreme to say banks hating credit unions? Well, the answer is because of the credit union difference. And in this video, we're going to go over some of the reasons why banks hate credit unions. Let's start out with a scenario. Everyone probably imagines back when they were in high school, well, there was this popular group otherwise known as banks. Just assume that for the sake of the scenario, in high school there are these popular kids known as banks. And they've been around forever. They're big, they're powerful, and everyone happens to know them. They also have this traditional way of doing things, and pretty much they control the flow of money. Kind of like how popular kids controlled the trends back in those days when you were in high school. Now, into credit unions, think of them as the new kids on the block. They're smaller, not as well known, but they got this kind of cool community spirit and vibe that is happening. The new student who shows up all of a sudden mid-year starts to get the attention. Why? Because he's a little different. Are you getting the picture? I think so. Well, now, here's where the drama starts. Banks, being the old students, now see, also the popular students, now see this new kid on the block, and they don't really like the competition. In other words, the attention that the new kid is getting all of a sudden. And the reason why they don't like the competition is pretty much explaining why credit unions are different from banks and why banks hate credit unions. Let's go over a few of the reasons. Well, first, when it comes to credit unions, they are not for profit. And that's an important point because banks are all about profit. And now let's have an understanding. Credit unions, because they're not for profit cooperatives owned by their members, doesn't mean that they are not motivated to make money or they're not motivated to seek profit. It's just that the seeking profits is not the main motivation. As opposed to banks, their main motivation is to make money on behalf of their shareholders. Their shareholders receive a certain amount in terms of a dividend payment, and banks strive to make sure that their shareholders are kept happy. So there's a profit motive that's involved. The credit union not-for-profit status is a bit different because, again, the primary focus is not necessarily making profit, but it's actually putting people before profits because the focus is on serving the members. For instance, rather than a credit union when it earns its profit, rather than distributing it to its members through dividends, they would probably want to decrease the interest rate on loans that are made. If that occurs, then when it comes to paying back the loans, then there's less interest you have to pay on top of the principal, which is the original amount of the loan. Or the credit union may decide to reduce the savings, or rather to increase the savings rate interest so that your deposits can grow. Or if it's not either of those two scenarios, they could potentially eliminate any fees that the bank, or rather the credit union, may charge. So there are various things the credit union does with its retained earnings. Rather than distributing it to shareholders, they increase and enhance service to its member owners. Let's look at another reason why banks hate credit unions. Well, credit unions are exempt from federal income tax, and banks aren't. This is probably one of the biggest reasons why they hate credit unions. Banks have to pay income taxes, whereas credit unions don't have to pay income tax. And there's a reason for that, because of their nonprofit status and because credit unions promote a social good. In other words, they provide access to capital because banks traditionally didn't. And when you had individuals who needed access to money and access to capital, whether it's to build a business or whether it's just to make ends meet, when they were turned down by other financial institutions, credit unions stepped in the gap. And because they provided this social good in order to make Main Street able to pay its bills, they are now, or since the Credit Union Act was formed, they are exempt from taxation. In other words, the income that is generated is not taxed. Now, over the years, the banks have persistently launched a tax against credit unions for this particular characteristic that credit unions enjoy, this exemption that they enjoy. Just recently, the American Bankers Association just launched a series of attacks. One attack was levied against credit unions' tax-exempt status, stating that it's being misused. However, according to two leading credit union trade groups, members received an estimated $14 billion in economic benefits because of credit unions. So the tax exemption is not being misused or abused, but is promoting a social good. It's benefiting the members that are part owners of the credit union. Third reason why banks hate credit unions is that banks are regulated more so than credit unions. They have more rules they need to follow, which can be costly, but because the risk of failure has a greater impact on society, there is a close monitoring, there's more scrutiny that is levied upon banks than credit unions. For example, banks must follow the Community Reinvestment Act, or the CRA. Credit unions don't. Now, the reason for that is because banks traditionally redlined people. In other words, based on the zip codes of those that sought loans from the banks, they were denied based on their zip code, where they lived. That's called redlining. So here the banks would, or rather the credit unions would step in and say, well, if you don't want a loan based on zip codes, then we'll again step in the gap and we'll provide loans and access to capital despite the zip code. Banks now are required to invest a certain amount of capital in certain communities, especially underserved, unbanked, and distressed communities. And they are required to report this data as per the Community Reinvestment Act. Now, credit unions are not required because traditionally they already invest in the community. And as you'll see in our fourth reason, that is one of the reasons why their members are loyal to the credit unions that they are part of. And that has to do with customer loyalty. Credit unions are known, and this is the fourth reason, they are known for their strong customer relationships and personal touch. Now, the credit union model is not for profit, not for charity, but for service. And that is a very important attribute in why it develops customer loyalty, that personal touch. Because service to members, that's a credit union priority. They also have less credit restrictions and also are willing to take a little more risk for their members. That also helps to develop that credit union loyalty because certain areas people of modest means that live or people of modest means that live in other areas, their credit scores may not be as high as other affluent areas. So therefore, that credit union will, in some respects, be a little lenient when it comes to the criteria by which its members are eligible to receive loans or to receive capital. So they are not as stringent, they are not as rigid as banks when it comes to providing access to capital. So in doing so, credit unions, they develop that personal relationship. They want to listen to the members. They want to hear the story because there may be information that the member can provide a credit union that is not necessarily in the rubric or in the metrics by which eligibility is determined. And that's one of the key characteristics of credit unions that banks don't like, because banks have a strict formula by which they determine whether someone is eligible for a loan or not. Also, credit unions support the community and community activities, and they also support other nonprofit organizations where members live and where they work. Credit unions are not required to do that, but it's in the people helping people philosophy of being involved in the communities where their members live. And fifth and finally, each time a credit union signs a member as part of that financial institution, that's a potential loss for who? For the banks. And that's why banks hate credit unions, because it's the new kid on the block that's getting the attention. Not like the banks who did things traditional way and in old ways, but now if you sign a credit union member, that's one less person or customer that the bank could enroll in their organization or company. Also, let me just point out, credit unions are insured. All the deposits are insured by credit unions the same way banks' deposits are insured. Banks are insured by the FDIC, whereas credit unions are insured by the National Credit Union Administration, or NCUA. And the deposits, to my understanding, is up to the maximum of $250,000 per person, and for a married couple, I believe it's $500,000 for married couples. Well, I hope you now come to the understanding why banks hate credit unions. And in my conclusion, well, yes, credit unions are relatively new. They're that friendly kid new kid on the block, and they're shaking things up in the community with the community focused approach. Banks feel threatened by this. And credit unions are challenging their profit model. They also enjoy tax advantages. They are not required to abide by certain regulations that banks are required to do. And credit unions are building stronger member relationships. They have that signature personal touch. All right. Well, that's it in a nutshell. And I hope you have enjoyed this particular video. As again, we will be discussing various topics. I'm also an attorney, so from time to time, I will be interjecting some legal information. For instance, there are credit unions that do estate planning. If you're in need of a will or need of a trust, credit unions have that personal touch, and you will be able to receive those types of estate planning services. So I will also have a video on wills and trusts. For instance. Also, I will be curating other news in the financial industry, not just limited to banks and credit unions, but things that you may be interested in, things about the economy, things about personal finance. So yes, the focus will be on spreading the good news about CUs, credit unions, but we will also be holistic in our information about finance, personal finances in general. All right. Look, I also want to hear your stories about your experience with credit unions. And that's good stories as well as bad stories, or bad stories as well as good stories. So put your comments in the comment section. I want to hear them. And if it's a good story, I'm going to let the credit union know. If it's a bad story, I'll also let the credit unions know so that they can do better. It's good to have feedback. And if you're looking for a credit union, let me know in the comment section. That way I can point you to whatever state you're in. I can at least give you a few suggestions. Of course, the decision will be yours, and you would have to do the necessary research. But by giving you a few names of credit unions in your particular area, that will at least be a head start. All right. Well, again, thank you. Much appreciated for you taking the time to view my first inaugural video by the Credit Union Evangelist. And remember, the motto is spreading the good news about CUs. Take care and see you in our next video.